Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to share some ideas with you that I have in the financial space. So when you look to charts like, in this case I just happen to have Goldman Sachs up, this is something that I feel is not really easy to play in either direction, and sometimes it's just as important to understand those that you may not want to play. So when you recognize those that you do, you know exactly what you're looking for. When I looked at this, you can see that the 10 and 34 off of the weekly chart are trying to shift, which is one of the first things that I look for in a trend reversal, especially after a weekly squeeze has fired. However, if you come over to the daily chart, you can see how that has fired short, and to some degree it has already run that course, moving down and making some very healthy extensions. In my mind, that has already made the move. I can't really want to be long this until the squeeze evaporates to the short side, and at the end of the day there's just not really much of a setup in that particular name for me. Obviously things like Wells Fargo, none of us have any interest in buying this, but I think it's important to distinguish that, sure, we don't want to buy these aspects of the financial space, but tickers like Bank of America show a much better tone to their move. Not only do they do a better job of holding this pullback into the 10 and 34, but you can also see that this decline that preceded the rally has not been taken over, or the decline that we're going through is smaller than the decline that preceded the rally, which tells us that bullish symmetry is still intact. You also notice that here the weekly squeeze is long, and the daily squeeze that had fired short exhausted itself and is now getting ready to move in the opposing direction. So I like the idea of looking at Bank of America long against 15. There's a few more that we can look at here that have similar setups, so you can pick whichever one fits your account and objectives the best. Citigroup is the next that I wanted to share, and this is very, very similar. This is actually cleaner, much cleaner than Goldman Sachs, of course, but then also still cleaner than even Bank of America, because notice how this squeeze on the weekly chart is still in full swing. It hasn't shown a bit of lapsed momentum. And same concept, where you're doing a good job of holding that pullback to the 34. And notice how the daily chart never fired short. Even inside that shift of momentum and where prices were fairly weak, it held up pretty well. Now today, and of course yesterday, you can see that we had some very strong volume, closed back up above those levels today, and I think that this will also offer some opportunity to the long side next week. One last one I wanted to share with you, which is a little bit more, I think probably geared more towards a stock trader than an options trader. But Key is also part of the financial space that has, as far as I can tell, really nice solid patterns. And another thing that I wanted to show you off of this daily chart, because I talk so much about the decline that precedes the rally, and I find that to be a very important point in symmetry. And if you notice this decline in relationship to the decline we've gone through here, they are exactly similar. Now why is that important? Because the last time we had this decline, we went on to add another $2.50 to a $10 stock. If that pattern continues, well, then you can get an idea of what those targets would be. So, regardless of what the headlines may tell you, regardless of how you may feel about the space, I think these are solid, bullish setups. And these are places that I will be looking to over the course of the next week for bullish opportunities. Also wanted to make sure that you are aware of the webinar we will be having on Wednesday. It's going to be October 5th at 7 p.m. Central Time, where we will have the chance to join John Carter and Rogie Horner for their take on trading the presidential election. I can't say that I personally am terribly excited about the election. It's just not really my cup of tea, but I love trading, and I love finding opportunities inside of that. This is some of the best macroeconomic advice that I know of, and I'm very much looking forward to seeing what they have to offer. So, if that sounds like something you might enjoy, there again, that webinar is going to be this coming Wednesday, October 5th at 7 p.m. Central, and I hope to see you there.